Here is something most people in this space never fully reckon with. The single biggest driver of Bitcoin's price on any given day, in any given cycle, is probably not something happening on the Bitcoin blockchain. It's not the halving. It's not on-chain metrics. It's not even sentiment. It's the external world, the monetary system, the strength of the dollar, decisions made in rooms where Bitcoin is barely mentioned. That sets the stage on which Bitcoin's price rises or falls. And if you don't understand those external forces, you are navigating this market with half the map missing. Today, I want to hand you the other half. Let's get into it. Factor 1, the Fed balance sheet. Bitcoin and the S&P 500 move together with an almost uncomfortable degree of correlation, which means the single most important external variable is the Federal Reserve, specifically what it's doing with its balance sheet. During quantitative tightening, when the Fed shrinks its balance sheet and pulls liquidity from the system, risk appetite contracts and speculative assets face limited upside. During quantitative easing, when the Fed pumps liquidity and makes money cheap, capital goes looking for returns. And Bitcoin has historically been one of the biggest beneficiaries of that environment. The relationship is visible and consistent across multiple cycles. When the Fed opens the taps, Bitcoin runs. When it tightens, Bitcoin struggles. That is the macro foundation everything else sits on. Factor 2, global M2 money supply. Global M2, the total money circulating across the world's major economies, has a relationship with Bitcoin that most retail investors have never been shown. The key insight is not the absolute level of M2, which trends upward over time, but the year-on-year rate of change. When global M2 growth is accelerating, Bitcoin has historically entered its most powerful appreciation periods. When it decelerates, Bitcoin has entered its most brutal drawdowns. This matters because Bitcoin is not an American asset. It is a global one. It is global monetary conditions, not just Fed policy, that shapes Bitcoin's macro backdrop. Right now, global M2 is expanding again. Historically, that is one of the most reliable tailwinds Bitcoin has ever had. Factor 3, institutional ETF flows. The launch of spot Bitcoin ETFs permanently changed who can access Bitcoin and how. Before ETFs, institutional capital faced enormous structural barriers. After ETFs, those barriers disappeared, and the cumulative flow data shows the impact in real time. Large ETF inflows have coincided precisely with Bitcoin price acceleration. Outflows have preceded or coincided with price declines. Institutional positioning, trackable through publicly available ETF flow data, is now a leading indicator for Bitcoin in a way that simply did not exist 3 years ago. When institutional money is flowing in, the market has structural support. When it flows out, that support weakens. Watching those numbers is no longer optional. Factor 4, dollar strength. The US dollar index, the DXY, has an inverse relationship with Bitcoin. When the dollar weakens year over year, Bitcoin tends to strengthen. When it strengthens, Bitcoin tends to face headwinds. The mechanism is intuitive. A weakening dollar signals that dollar holders are losing purchasing power, making hard assets like Bitcoin more attractive as stores of value. A strengthening dollar signals the opposite. As with M2, the year-on-year rate of change is what matters, not the absolute level. When the dollar is weaker than it was 12 months ago, Bitcoin has historically responded. Factor 5, corporate treasury accumulation. The newest factor is also the most structurally significant for the long term. Treasury companies now collectively hold approximately 1 million Bitcoin, with over 100 publicly listed companies worldwide actively adding to their balance sheets. From a pure supply and demand perspective, that is 1 million Bitcoin removed from liquid circulation, held by companies with fiduciary structures, board oversight, and long-duration horizons. These are not coins that get panic sold on a bad Twitter day. They are effectively vaulted. And every time another company converts cash into Bitcoin, the liquid supply tightens further. There are only 21 million Bitcoin that will ever exist. And the compounding effect of that accumulation is not yet fully priced into how most people think about supply dynamics. Why this all matters right now. When you put all 5 of these together, Bitcoin's price is shaped by Fed monetary policy, global M2 growth, institutional ETF flows, dollar direction, and corporate supply compression. None of these appear on a Bitcoin price chart. None show up in on-chain metrics. And yet every single one has a historically consistent relationship with where Bitcoin's price goes. Several of these factors are currently at inflection points. Global M2 expanding, treasury accumulation accelerating, ETF flows showing early signs of reversal. Not all pointing the same direction at once, but read together, they give you a far more complete picture than any single metric can. The people who have been right about Bitcoin's biggest moves were almost never the ones with the best chart patterns. They were the ones who understood the external world first, the liquidity cycles, the currency dynamics, the institutional flows, and positioned themselves before the on-chain data caught up. That is the edge. Drop a comment. Which of these 5 factors do you think matters most right now? Subscribe if you want to keep tracking this together. See you in the next one.